Hi Moneymakers, it's Talking Sense David, a place where complex finance is made easy for all. Now in today's video, what I want to talk about is when you use a balloon payment structure when financing the purchase of a new car. What exactly is a balloon payment? A balloon payment, or otherwise known as a residual payment, is when you defer a large sum of money to the end of the car loan term. So you'll pay that amount at the end of whatever contract term you've agreed to, 60 months or 72 months. Now by opting to use a balloon payment structure, what this does is lowers your monthly car payment, because what you are doing is paying a part of the price of the car when you are paying that loan. However, at the end of the term, which is usually 60 months or 72 months as mentioned, you will need to pay that final deferred amount in full at the end of that loan term. Now let's take a look at an example of when you would use a balloon payment structure and the costs involved. Let's say you buy a car for $400,000 at 14% interest over 72 months. And that comes with a 20% balloon payment. What this means is that the balloon payment would be 80,000 Rand, because that's 20% of the car price of 400,000. So at the end of 72 months, you would need to pay the 80,000 Rand in full, because that is the amount you are deferring. Now because you do this, it lowers your monthly installments, because the monthly installment is now based on the remaining capital base of 320,000 Rand. That's the 400,000 minus the 80,000. However, the interest portion of your monthly payment would still be calculated on the actual price of the car, which is 400,000. The total cost of the structure and the 72-month payment term over 6 years would be 628,715 Rand and 70 cents. That payment would be broken down in interest and the initial principal. The principal amount would be the loan and the fee of 401,207 Rand and 50 cents, and the interest you pay back over this term would be 222,540 Rand and 20 cents. Now let's look at the pros and cons to balloon payment structures. Some of the pros include that you are lowering the monthly amount of your car payment, which allows you to be able to maybe afford the car right now because it's lowering your monthly payment and you can get the car right now. However, that does come with more interest because the payments take longer to pay the car off. Now the cons, on the other hand, for me outweigh the pros, because what you end up having is a car that's depreciating in value and more interest expense over that car term. And if you had to settle that car payment, you might find yourself in a situation where the outstanding debt is more than what the current car's value is worth. So comment below, let me know if you think it's more of a pro, if it's more of a con. Alright, let's look at what you can do when you are about to settle the balloon payment. There are three options available to you. Option 1 would be to refinance the loan term over a new period. Option 2 would be to trade in the vehicle and use the trade-in value to offset the balloon payment. And option 3 would be to settle the loan amount and close it, which you would then need the money saved or money you've kept aside for this moment. So those are the three options. It would be refinance, trade in, or settle the account. Alright, let's summarize what we've learned here today in the video. Balloon payment structures can be helpful because they lower your monthly cost. However, the interest expense can be a lot more over the loan term because it takes longer to pay off. There are pros and cons, but for me personally, I think the negatives outweigh the positives, because you may find yourself in a situation where the outstanding debt is more than the car's value. And that's what balloon payment structures are. They help you, but they also have negative effects. So from me, until next time, I'll see you in future videos. Bye for now. Don't forget to subscribe to Talking Sense for more financial content.